Hey Rising JPians! Thank you for inviting me to Exceed 2025, the largest accounting convention in the Philippines. This year's theme, Accountancy Everywhere, Backbone of Every Industry, reflects the critical role that the accounting profession plays in driving business success and economic stability across sectors. As I reflect on my journey, I am reminded of how my dual background as an accountant and a lawyer has shaped my approach to leadership as chairperson and CEO of the Securities and Exchange Commission. I am honored to be the first CPA lawyer and former active JPian officer to have served as chairperson of the SEC in Philippine history, a distinction that underscores the value of combining financial and legal expertise in overseeing and regulating our capital markets. My roots in the accounting profession run deep. In the mid-80s, I served as the Federation Regional Chairman of the Junior Philippine Institute of Accountants, or JPIA, for Western Mindanao. That experience gave me my first real exposure to the importance of financial discipline, professional integrity, and leadership, values that continue to guide me today. Being both a CPA and a lawyer has given me a distinct advantage in fulfilling my duties at the SEC. My accounting background has made me an effective and sharp regulator, as I can grasp the complexities of financial reporting, corporate disclosures, and internal controls. I can evaluate financial statements not only for compliance, but also for the underlying financial health and risk they reveal. At the same time, my legal training equips me to interpret and enforce securities laws, protect investor rights, and ensure that our regulatory framework remains sound and responsive to market developments. Accounting has been called by Warren Buffett and other industry experts as the language of business. Accountancy is even broader and encompasses accounting and other disciplines like auditing, tax planning, financial advisory, and management accounting. Accountancy serves as the foundation for strategic decision-making, financial stability, and regulatory compliance. It provides the financial insights that drive business decisions, ensure compliance, and support long-term growth. Over the years, the accounting and auditing landscapes have evolved significantly, shaped by two key forces: the rise of artificial intelligence, or AI, and the increasing demand for sustainability reporting. AI is transforming the accounting and auditing profession by automating repetitive tasks, improving accuracy, and enhancing decision-making. Bill Gates recently predicted that AI will become free intelligence in the coming decades and could replace roles in teaching and medicine within 10 years, though some fields, such as biology, energy, and sports, may remain less affected. In the accounting and auditing fields, AI is already making a significant impact. Tools like KPMG's Clara and PwC's Halo analyze massive datasets in real time, identifying risks and anomalies faster than human auditors. AI-driven platforms enable continuous auditing, where financial data is monitored in real time, improving audit quality and early detection of financial issues. Predictive models powered by AI help businesses forecast cash flow, assess market risk, and identify cost-saving opportunities with greater precision. While AI has raised concerns about job displacement, it is more accurately reshaping the role of accountants rather than eliminating it. By automating routine tasks such as data entry and reconciliations, AI allows accountants to focus on higher value work. That's strategic advisory, data interpretation, and decision-making. The profession is evolving from transactional processing to a more analytical and strategic function. The rise of sustainability reporting has introduced new complexity to the profession. The International Sustainability Standards Board, or the ISSB, has established a global baseline for sustainability disclosures through IFRS S1 and IFRS S2. IFRS 1 covers the general requirements for disclosure of sustainability-related financial information. This requires companies to disclose material sustainability risks and opportunities affecting their financial position and performance. While IFRS S2 deals with climate-related disclosures, and this aligns with the recommendations of the Task Force on Climate-Related Financial Disclosures, or the TCFD, and requires companies to disclose how climate-related risks and opportunities impact their business model, strategy, and financial performance. Accountants are now tasked with integrating environmental, social, and governance, or ESG, data into financial reports, providing stakeholders with a holistic view of business performance. For example, a company reporting on carbon emissions under IFRS S2 must also assess how rising carbon costs or regulatory penalties will affect its financial outlook. Similarly, companies may need to adjust asset valuations or forecast cash flows based on climate risk exposure. The Big Four firms are already advising clients on how to meet these new requirements. EY and Deloitte have launched sustainability and climate risk advisory services, helping businesses integrate ESG factors into their long-term strategies. Accountants now play a crucial role in ensuring that ESG data is accurate, consistent, and aligned with financial disclosures, thus creating a cohesive report that connects sustainability performance with financial outcomes. Accountants play a vital role in helping businesses respond to changing market conditions through financial analysis, strategic planning, and risk management. By providing real-time insights, they enable businesses to adjust pricing, manage costs, and maintain cash flow during economic uncertainty. For example, during the COVID-19 pandemic, accountants helped companies secure government aid, restructure operations, and manage liquidity to stay afloat. They also ensure that businesses comply with tax laws and financial regulations, reducing the risk of penalties and enhancing operational resilience. The role of accountants has shifted from record-keeping to strategic advisory. Thus today, accountants are expected to have expertise in data analytics, automation, and AI to improve efficiency and decision-making. The Big Four firms now use AI-driven tools to automate audits and identify financial trends. There is increasing demand for accountants to provide guidance on business transformation, sustainability, and ethics. The rise of ESG reporting reflects this shift. Accountants now measure carbon footprints, social impact, and governance practices to align business strategies with stakeholder expectations. Automation and AI have streamlined routine tasks like reconciliations and invoicing, allowing accountants to focus on strategic planning and performance analysis. Tools like Power BI and Tableau enable accountants to visualize complex data and forecast market trends. Sustainability reporting has also gained prominence, with ISSB standards requiring companies to disclose how ESG factors affect financial performance. For example, companies now link carbon emissions and social impact data with financial statements to present a more comprehensive view of performance. Again, the Big Four firms are already at the forefront of this shift. Deloitte and PwC offer specialized services to help businesses comply with ISSB standards and align ESG data with financial reporting. Accountants are now expected to provide deeper insights into market positioning, competitive advantage, and long-term strategy. Accountants help businesses navigate economic uncertainty by providing financial forecasts, scenario planning, and cost management strategies. They guide capital allocation and investment decisions to maximize returns while preserving cash flows. For instance, during periods of inflation, accountants advise businesses on adjusting pricing strategies and managing input costs to protect profit margins. Their insights enable companies to recover quickly from downturns and position themselves for future growth. In conclusion, the accounting profession is evolving rapidly, shaped by technological advancements and the growing demand for sustainability. AI is transforming the way we conduct audits and analyze financial data, while new sustainability standards are redefining corporate reporting. Far from being displaced, accountants are now positioned as strategic advisors, helping businesses navigate complex challenges, and seize new opportunities. Accountants are no longer just record keepers. They are the architects of business strategy, financial health, and long-term growth. That means you, my dear students, the future of business and the financial world is in your hands. So congratulations to the organizers and participants for sustaining this commendable Exceed 2025. Kudos and congratulations.